Hi and welcome to this live Forex strength and weakness table video. My name is John. I'll be taking you for the charts this Wednesday the 19th of October. Here you can see in front of you, you have the live Forex strength and weakness tables. We have two types of tables that you can take a look at. You have the trend traders table and the day traders table. These are the same studies but just different time frames. So our trend traders is our higher time frame and the day traders is the lower time frame. You can see here some of the currencies are highlighted in green. That means there is a confluence between the two trading timeframes. Now, if we take a look at some of the non-highlighted currencies, the non-highlighted currencies means that there is no confluence on the timeframes. However, you can see here there is a clear divide for the US dollar because it is S3 on our trend traders. So S3 is the third strongest, but is W3 on the day traders, so W3 is the third weakest. Now, what does that tell us? Well, it tells us that maybe from a higher time frame perspective, the dollar is strong. However, on the lower time frames, the dollar is weak. So maybe, let's say the dollar has been in an uptrend for a while or has been very strong. Maybe we're in the retracement phase or a pullback phase on the US dollar at the moment. These tables auto-update every 15 minutes, 24/7. So wherever you are in the world, you can access these tables and get a accurate update. So what are the tables telling us today? Well, it's telling us that the pound is the strongest on the trend traders, the third strongest on the day traders. It's telling us that the euro is the second strongest on the trend traders, second strongest on the day traders. And the dollar is S3 on the trend traders. However, we know that it is W3 on the day traders. Kiwi is the strongest on the day traders, followed by euro and pound. Yen is the weakest currency on both tables, followed by Aussie, and then Swiss on the trend traders, Swiss and dollar on the day traders. So we're going to be focusing on euro Swiss today. We focused on pound yen in the previous videos, which you're happy to take a look at the end of this video. But we're going to focus on euro Swiss today. So let's jump into the chart. So we can see here I'm on the monthly time frame. The reason why I'm just on the monthly time frame, we just want to take a bigger picture outlook on euro Swiss at the moment, just to see what could potentially be going, where could price be heading to and whatnot. And you can see here that price has started, or looks to be starting, a little bit of a pullback move here. So the overall trend of the market is down. We can see that the euro has actually been weakening against the Swiss franc for some time now. That was all down to really the Swiss National Bank acted aggressively instead of, or before the ECB did, with their interest rates, and that gave a lot of strength to the Swiss franc, and euro Swiss continued lower. Now you can see here that price recently impulsed to the downside, but for the past sort of 2 to 3 months, we've just been going sideways here. We tried to break to the downside. Price has failed to trade any lower. So it looks to me like we are going to see a little bit of a retracement move here. Now, if we go down to a lower time frame like the weekly, for instance, you can see that we have a level here of interest, which is the 0.98 handle. Now you can see that price has rejected this level on multiple occasions. However, it looks like we're breaking through that now. So in the context of sort of trend, if price was going to push higher, where could it push to? Well, sometimes price comes back to previous areas of structure. So you can see all these levels up here, price found support. So if price is going to pull back, it could pull back into these levels of interest. So if I was just to go down to a daily time frame and just zoom out a little bit, that level of interest down through there is the 1 handle. Okay, so parity on euro Swiss. If price was to trade out of this area, parity could be the first target. You've then got other targets, so you could look at the 1.0.250 handle, which is all these lows over here. And if price was to really take off, we could expect price to maybe come and retest these monthly highs up here, which is around the 1.0500 handle. Going back down to the lower time frames then, because price looks like it's on a breakout move at the moment. You can see here that I've highlighted on a 4-hour time frame this consolidation here. So you can see that we're trending to the upside. The market's making higher highs and higher lows. Okay, we've recently come and broken out of the key level of the 0.9800. We tried to climb back in, but buyers have stepped back in again. So what I would be looking for here, let's just go even lower. I'd be looking for a close outside of that high, and you can see that we've got one here on this hourly time frame. So that could suggest that we're going to see price continue to push to the upside. Alternatively, what you could look for is wait for further closes outside of the level, wait for the market and look for price to form a higher low at previous structure, which could be these previous highs in here. We do have to be a little bit careful today though. You can see here in the corner we have our chart partner, and you can see that one of the updates is telling us that the market is mixed on a slow day today. So we do have to be a little bit careful. You can also access the calendar here, and you can also access other data like the open, the high, the low, and the spread, the cost of doing business. I will leave it there. Thank you for watching this video update. If you are watching this video at a later date and are interested in becoming a member and seeing all the services that could be available to you, then please head over to charlesclifton.co.uk. If you head over to the homepage, you can see that we have a trial period for £1 where you can access the services and see if it is for you. Thanks for watching, and I'll catch you in the next one.